Good evening and welcome to the Australian Stock Market Show. Now the All Ordinaries Index rose strongly last week, so can we expect the Australian stock market to return to being bullish? Stay tuned as we'll talk about that shortly. For our main topic in tonight's show, we get into a hot topic, and that is, should you use AI or robot trading strategies to buy stocks? First up, we'll share our hot stock tip for the week, so sit back and relax. Tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the stock market. Tonight we have plenty of great stocks to look at, including uranium miner Deep Yellow, Kogan, Fortescue Metals, ZIP and WiseTech, and so many more. So sit tight as we'll get into that very, very soon. Now I'm Dale Gillham and I'm your host for tonight, and joining me is our team of professional traders, Janine Cox and Philip Tortevsky, and we're Australia's most trusted stock market educators. Hey Janine, hey Phil, how you doing, guys?
Great,
Hello.
thank you. How are you?
I'm loving the market at the moment. I think it's fantastic,
It's
and I know you're excited about it.
I'm loving the beach more than anything.
Yeah, Phil was telling me he had ice creams in the beach all weekend. Like, that's really, really good. But anyway, tonight, as mentioned, we answer the question, does AI or robot trading really make you profitable? Stay tuned as we'll get into that and more very, very soon. But first, we need to get into this week's hot stock tip. Phil, what do you got for us tonight?
Now this week I've got, what a stock tip I've got for you. It's going to split the table in half.
Ooh.
So tonight's hot stock tip is DYL. And if we bring it to the market index.
So that's Deep Yellow, the uranium miner.
Yes, Deep Yellow Limited.
You're starting off with a challenge.
Well, it's definitely going to be a challenge. We'll see how it ends up. But on the market index, if we bring it up, we can see that, as we said, this is a uranium miner. It's got projects in Namibia and Australia. It's production along with exploration. We've got some key metrics on this one. The 1 year performance is up 108%. 2024 year to date is up 45%, which is quite good actually. The market cap is $1.2 billion. And it's ranked within the top 300. So this is one that would be applicable to both institutional and retail. And let's take a closer look on the chart. We'll bring up the chart now. Now, I know everyone's going to get really, really excited here. And the
I'm
chart,
excited about it.
I'm saying, what the?
yeah, the chart does look like a little bit of scribble halfway through the end, but we'll zoom in and we'll get to it. Now, look, what caught my eye with this one in particular and the whole uranium space is there's been a lot of talk recently, JP Morgan articles around uranium.
Yep.
So I went and did a bit of digging, and I found Deep Yellow, and look, instantly you'll see on the chart, I'll hover my mouse over where I've got recorded here, record monthly volume. Now, that instantly pricked my ears up. This stock has been around since 1989, and only in the last 2 or 3 months, if you zoom in here, in the last three months, it has made record volume. Now, this is more volume than even since the stock listed. And we all know when stocks list, there's a lot of hype around the start, and it surpassed that, and it surpassed that 30 years later almost.
Wow.
So I think now is a fantastic time to start looking at this stock, because as you can see on the chart, it's been dormant for the best part of 10 years plus. And if we zoom in a little closer now, we're starting to see not only the bars create a bit more volatility and expand, which is telling me there's more buying, but again, that volume that's coming is telling me that something's happening around this level, and it's definitely time to watch this stock. I've added a line here also to show that as price has broken up to the recent downtrend, it's changed its rhythm again, going back up, and look, closing above highs, making higher lows. I think this one is definitely one to watch given the upside potential. And
Would you like to take a breath?
I'm getting ready to get you on here, Jean, because I know you're about to give us your opinion. So what do you think?
Look, I think that you did an amazing rundown of what this stock has the potential to do. The volume's really interesting to me in particular, because it's never had that level of volume in the past before. Although I found it really interesting to note that if you look at where it was going up and making some of the biggest moves in price, there was no real volume behind it. So therefore, what does that volume really mean is what the question that I'd really want answered, because, okay, it's got high volume, but there's got to be a buyer and a seller. There's people on both sides of that equation. If someone's buying, then obviously someone's selling that. So what's really going on there? So I guess for anybody if they were considering buying this sort of stock, then make sure you do your research so that you know what's going on, especially with stocks at this end. While we say that technical analysis rules, we do say that with these smaller stocks, like you've done your research to really understand it.
So what you're saying, this could be like one institution swapping to another institution and moving stocks around, or is it more institutional buyers? What is it?
It's more, to me, it was more just the story that uranium was hot again over the last couple of weeks or months, and now that we've found a stock that's made this unusual movement, particularly with the volume, I thought it was one to definitely watch for, because when you find stocks doing things that they haven't done in 20, 30 years, it's definitely time to have a look at least.
So alrighty,
well, that is it for our weekly hot stock tip. Now shortly we'll get into our topic for the night, but before we do, right now is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988, that's 03 for Melbourne, 9290 9988, or you can just text the question or your question to the number on your screen. Now, the first caller into the show right now tonight gets a free copy of my book, Accelerate Your Wealth. So make sure you pick up your phone and dial 03 9290 9988. Now, while you do that tonight, we give you our thoughts on the Australian stock market. So let's get into it, guys.
All right, on your screen right now is a chart of the All Ordinaries Index. Now, interesting as it is, you can see that the All Ords has really been hitting its head around this level, just below 8,000 points. And we're trying to break through that high, but not quite getting it. Now, some people might be thinking that because it hasn't gone through its high, that, okay, it's still to come, it's not there yet, maybe it could fall away.
Yep.
But what I want to do is for people who are not watching the All Ordinaries Index and they're watching the XJO, they'd already know that the market has actually gone through its high, because we're talking about the top 200 stocks. So I thought I'd quickly just jump over and show you this XJO chart here, right? So you can see, now can we just get a magnifying glass there and have a bit of a look? You can just see that it's only just gone through. So although we may have a little bit of a pullback, I'm really excited and clapping my hands and celebrating for the fact that it actually has broken that level, because we haven't traded at that level since July 2020, it's just now gone through that high. So as far as what we see going forward for the All Ords and the XJO, I think there's a potential for 30% upside for our market over the next few years. As we come into the peak, I'm really backing between 8,600 to 9,000 points. That's on the XJO, with the potential to go to 10,000 points. So as far as looking at the market overall, I think it looks really nice, roses. Where my opinion would change, and there's always the other side of the coin in this equation, would be that if it actually came back and traded strongly below that bar in December, because that's pivotal, because that's when the market actually really started to take off again. So if we reverse that range, then I'd have a different view about it.
So you're talking, what, 2 years to get to those target levels you're talking about?
I'd say it's going to be about two and a half. I think.
2.5.
Yeah.
I know I'm going to be doing a recording in the next few weeks on my predictions for the All Ordinaries Index for the second half of this decade, so I'm going to narrow it down for all our talking wealth viewers. What's your opinion, Phil?
Look, I'll keep it short term. Given the market's at the all-time high, it's not uncommon for the market to stall around these levels, given the unknown, and generally around all-time highs, because it is unknown, you're seeing short-term profit taking and a little bit of uncertainty. So now that it's poked its head above, I would not be surprised at all if it stalls for a month or two and just finds its base around here. And look, like Janine said, if it continues on up, and there's blue skies above, so
somewhere down here, perhaps about 7,100 or round about there.
In our report, we wrote about look at the higher end, 7,800 to 7,500, even further down to that 7,000 level. But just where it's poised now, it's at that level where it can have a breather, and because of the uncertainty in the short-term profit taking. So that's what I see.
And we're also talking about the seasonality chart on the All Ords going back 40 odd years in the 1980s. And February is traditionally a flat month, so that's possibly also why Phil's saying it might be a bit of a nothing month at the moment before we take off. But anyway, that is it for our thoughts on the Australian stock market. Now, before we get into the first email, remember to get your questions answered live on air, you will need to text or call into the show. Now, you can also send questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question. Our first email is from Paola, who says, "Hi Dale and Janine, I have had Kogan on my watch list for a couple of weeks as it bounced off a trend line. Now I'm looking for an entry, although I feel that I'm late for the party as usual. I'm reading your book for the second time and I'm finding it really helpful. Please correct me if I'm wrong in my analysis. The monthly seems like it might close strongly above resistance at $5.60 with volume coming in. Now, on the other hand, I was wondering if it would be wise to wait for a close above $7. Also, if I was going to enter the trade now, do you think that a stop loss at $4.80 would be adequate? Thank you in advance, Paola." Janine, what do you reckon?
I like your choice, Paola. Fantastic. And looking at the chart, it looks great that it's gone through that point. Whether you'd wait for it to go through the $7 though, Dale, really depends on you.
That's
you
a
as,
big
it's an
move.
individual, right?
Yeah.
It's a big move. Look, let's just have a look at that as a percentage first.
Yeah.
Coming from that level. So it's closed today at around $6.
Yep.
So that's 17% upside, potential that you could miss out on. So the alternative thought to that is to actually decide on taking it shorter term and waiting for, a bit of a pullback and then a move back up again. But it could race away in that time.
You mentioned trend lines, Phil, or Paola mentioned trend lines. So what do you reckon on the trend line?
Look, Paola, the downtrend line, there would be one on the monthly chart that's been broken. We can draw one up.
That's what they're talking about.
Yep, we can draw one up right now.
Do you want me to get one for you?
Yeah, please draw one up, Janine, for me.
Okay, so yes,
what?
Certainly. Okay, so from
you.
the all-time high?
Yes.
Okay.
Yep, so look, it's definitely broken a downtrend line, as you can see there on the chart. What I want to focus on, Paola did say she was trading this on the monthly chart, and she said she might have the fear of missing out.
Yes.
Now, this stock's at $4 or $5 at the moment. The all-time high is up over $25. So that fear of missing out, you definitely don't need to have that, Paola, because there is so much room in this stock. Although that being said, you're probably thinking about back in 2020 how these stocks just shot up through the roof, and you're wondering, could that same scenario happen again? And it could, but even so, if you're looking at above $7, there is so much room and upside there that you don't really need to worry about that.
Is there a trend line entry on that monthly chart now?
Absolutely.
Okay, so they're not wrong in saying what they've said.
Not right this moment. There isn't a trend line entry, but it did cross a trend line way back here in November 2022, December 2022.
The 2-bar close rule, if I remember my
look,
diploma well.
On the weekly chart though, if we have a look down there, it's
monthly?
debatable, and you need my glasses to have a look at that. But as to whether you get the trend line in there or not, I'd have to tick all the rules.
All right. One last question. $4.80 stop loss. If they bought today, is that too tight or too loose?
Way too tight for me.
Way too tight.
Actually, I like it. Yeah, you might be surprised at me saying that, but I think that's actually a really good point. So let's just have a look. And I'm not trying to be different to you, Phil.
No, that's good. That's what traders do, right?
Yeah.
But you see, if you got in today, it's a 20% loss, which I reckon is probably a bit too much.
Too much.
It's personal preference, and to me, I would back test this first before doing anything.
Yeah, but they've only read my book, so.
Yeah, well, that makes it tough, doesn't it? So, look, it's a really risk to suit you. Between 10 and 15 would be normal.
Last words, Phil.
The reason I've said it could be a bit too tight is because you've got these lows back in February and also November and October, and the stocks rebounded from these levels. So giving it not enough room to at least go to where there was support in the past, you could be selling yourself short.
Cool. Well, great information there for you, Paola, to have it consider. But again, obviously the trend line looks pretty good at the moment. So do your research, as Janine said, and maybe do a bit of back testing on it and have a play with it. But now we do have a phone call, guys. Welcome to the Australian Stock Market Show. You're on with Dale, Janine and Phil. Have I got Ali there?
Yes, you do. I'm feeling a bit starstruck.
Oh,
Dale,
I know Janine starstrucks me all the time, Ali. Absolutely. Welcome to
I've
the
been
show.
watching. Thank you so much. Look, I don't have a stock question, but I just finished your first book, and I have been investing for a long time in, like mainly in tech, because that's where I work in. But I did have a question after reading your first book, and that was about stock loss points. And I must say that's probably one of the biggest things that I've learned. It is one of the most important things that I think is after everything that I've read that you've done. So I do have a comment that I wanted to make. So when you do have a share that rises, how often should you review the stop loss points? Like, is that once a month, or do you just, like, when should you review it? Because in your book you kind of said if the share goes up, you should reconsider what your stop loss is.
Okay, so what? Well, we actually did a show last week. We actually talked about stop losses. Did you watch last week's show?
I did miss last one. I just had too many kids things on, but usually I'm there.
Have a watch. Well, I'm going to ask Janine and Phil to answer about stop losses in a minute, about, you know, do you rise them up and when do you do that? But go and have a watch last week's show. We do talk about stop losses in a bit of detail as well. But thank you, Ali, for calling into the show.
No.
Cool. Well, she's asking about stop losses, like, you know, if you buy a stock, do you raise, and I talk about in my book how you raise a stop loss. Now, I know an uptrend line is a trailing stop loss, and we do teach that in the book. Now, what are you thinking about where to move your stop losses up? You can go first, Janine.
Look, I just wanted to say, first of all, that Ali, great question. A lot of people need to understand this.
And she's an investor too.
Yes, okay. So it's really about having a plan before you actually get into a stock, and I think that's part of it first.
Yes.
So it's not just the initial stop loss, it's then knowing what you do. But also, more shorter term traders are more likely to be more flexible and change their stop loss as they go because of the movements. But it's just about watching the bouncing ball. The best way to describe the stock's movements are watching a bouncing ball and just driving the stop loss up underneath it. How tight it gets set is determined by whether you're trading short term, medium term or long term.
And the stock, by the way, too.
Yeah.
So what do you think?
Look, the idea is always to let profits run. So just understand, if you're going to go with that strategy, that in doing so, the risk is that you lift your stop too high and your stop gets hit and you leave so much profit on the table. So if you're going to do it, it's okay. It's a strategy that you can do to trail, but just be aware of the risk that you're in doing so.
But I think one of the things she said was that's the most important thing she'd read in my book, and I 100% correct.
Oh yeah.
It's, and you know, to me, it's, if the more you learn how to sell, the more money you're going to make, and the more you learn how to take stop losses, the more you're going to make. So I think that's a really, really critical thing you picked up, Ali, in the book. And I'll say that to all people: if you're not using a stop loss, you're putting your money at risk, and you'll make far more money if you use stop losses. So if you haven't read my book, you can still get that first one that Ali mentioned for free. Just got to pay the shipping. So you just go to our website, it's on the homepage, there's a big button there, click on it, we'll send it out to you. You just got to pay the shipping. So we've paid for the book, and you can learn on how to do that. But let's get into our next email question, because we have an email from Kylie who says, "Hi, a long email coming your way. Thanks for the warning, Kylie. Apologies in advance. Now I have my superannuation with a financial advisor, having finished your course and looking at my super balance. I questioned the very awful return on Cromwell Property Group. I chatted with the advisor and he gave me some of the fundamental reasons why the stock has performed so badly since the COVID low, and then advised that he was reluctant to realise the loss because the stock was showing signs of recovery, and that when interest rate cuts begin in the market, then the share price will recover, or likely recover." Now, before I read any more of Kylie's email, I wanted just to highlight that, you know, obviously going to your financial advisor and he's saying interest rates, it's like the stock's likely to recover when interest rates start to fall away. Now, we know for a fact that all the big banks are predicting interest rate cuts for the end of the year. So what do you do now? So your stock's still going to be not looking good. But again, you can tell when you've done the course like you have, Kylie, you know whether the stock's going up or down. And so not selling a stock that's falling away is, in my view, you should be taking your exit strategies pretty much anyway. But Kylie goes on to continue by saying, "I'm not confident that fall is over. Would you agree there's a high probability that the stock could fall to 15 to 16 cents? It's not looking strong enough to stay up from the current price. My question centres around what you would do in these circumstances. If I'd purchased the stock in my portfolio directly, I would have limited my risk to capital and exited at worst with the 15% stop loss. I can see the stock falling another 12-ish%, so my instinct is actually to tell the advisor that if the stock falls below 31 cents, sell out of that position, put the loss behind me, and move on. Thank you, Kylie. I love what she's talking about. What do you reckon, Phil?
Spoken like a professional trader.
Yeah.
Really. And she's right. You know, I can definitely see this stock going down to 15 cents. It's only had, over the last couple of months, 2 months up. Everything before that's been red. So 2 months versus 10, 12, 15-month falls is not enough to say that we've hit an all-time low. And the thing with the interest rates, it's like, well, interest rates do affect the general market, but in terms of individual stocks, yes, they can have some effect, but I mean, to say that it is going to be the reason that this stock's going to fly all the way back up from 30 cents back up to that 90-cent mark.
I want to ask you something else too, because you were a portfolio manager for many years with a team of financial advisors who were the front people to the client and then asking you to make money for the client.
Yeah.
So what do you think of her comments about the financial advisor?
The industry is, I mean, the financial advisor has a way of viewing things, and it's that buy and hold, long-term approach, set and forget type model. It's not really capital protection. So unfortunately, that is not on the forefront of their mindset. So I can understand totally why he said that, and we've had so many arguments with financial planners. When I hear financial planners, my ears start going red. but yeah, because we were always at heads. You know, we were very much, you know, we protect capital, we take our stops, and we don't go in the market when it's not time to be in the market. But you know, the buy and hold view is not that. So unfortunately, for her level of knowledge that she's done the course, her thinking and the financial planners are most likely won't be on the same page.
We've actually had students who were financial planners who worked in financial planning firms, and they became very much like, you know, their adversary almost, because they were saying that they didn't think that they should be putting clients' funds into these sort of stocks.
We've had some of them move financial planning groups because ones they were with wouldn't allow them to be more active.
Yeah.
And they went out on their own or moved financial planning groups.
But can we just coming back to this chart just for a minute, the interesting thing is here is that the advisor eventually will may be right. You know, no, I'm not saying he's right, but I'm saying we all know that eventually stocks turn back up again. Most. It depends on the stock. But how long do you have to wait, and when? And how much more is it going to fall? And that's the real risk here, isn't it? But you know, I wouldn't necessarily say wait till it gets to that low. It may actually be doing a turnaround right now, because this up bar that we've seen back in is it October or November is the biggest rise it's had of all that decline. So if it's going to turn, it's probably going to do it now. Otherwise, I think you're right, Phil, it might come back down towards that 15 cents that she's talking about.
Well, I think Kylie knows more than her advisor, so stick with your guns, Kylie, and stick with your plan. Well, that is all we have on that stock. Now is time for our hot topic for tonight. Now, we'll be sharing our top 10 stocks and get into a bit of controversial topic to answer the question, does AI or robot trading really make you profitable? Now, depending on who you talk to, you will get different answers. Now, we'll talk about the pros and cons tonight, and whether trading stocks like BHP, Fortescue, ZIP and WiseTech is done better with or without using AI, and which method will get you the highest returns. Now, the simplest form of robot trading is software that uses an algorithm, which is mathematics. And simply, an example is getting the software to calculate if price does X, then buy. Some want to make that sound sexy, or what they want to do, or what they're saying is it's confidential or secretive in how they do it. But essentially, it's just data in and data out with the aim to make a decision to buy or sell. It's easy if you have a computer, recommend or place a trade for you. But is this really in your best interest? Now, more importantly, what is the risk you are subjecting yourself to? Now, some trading software programs allow you to create your own algorithms, and these are normally constructed with technical indicators. Now, big institutions have traded billions this way for decades, and there is a vast difference between what these big institutions can do and what a retail trader can do. So I want to bring Phil into the discussion, as he, being a professional retail trader, has traded in different markets, including FX, where these AI robot systems are so often used. So Phil, as a retail trader, would you use them, and what's your opinion, all the pros and cons around all this?
Look, they're very popular in FX, that's for sure. And given FX is a market that's 24 hours, it's you know, for those traders, and it's generally those shorter term traders trading the volatility. So sitting in front of a computer all day is you know, not
not possible. So this is why they're so popular in FX. The pros and cons, I mean, one pro would be that, to be able to watch the market continuously.
Yep.
It'll take some of the emotion out of trading. It'll, pushing the button and all that kind of stuff. The cons, I think, far outweigh the pros. If a computer glitch happens, you're not there to watch the market, and that could cost you your whole account. And
Something hits the fan.
We've seen that happen, before on the institutional end, and the retail end is not as sophisticated as that. So that is one of the major flaws in that. And secondly, the market can change.
Yep.
Quite often the market changes, and like you said, these EAs, they call them,
Yep.
robots. They're a simple mathematical calculation based on an indicator type strategy most of the time, and they're a repetitive thing, which, as we know, the market is not always repetitive, and it works sometimes and then other times it doesn't. So for me, I like to trade, doing my work and being on top of it. So yeah, I've never used them, and I really can't let anyone else be in the driving seat except for myself.
Wise words of wisdom. Now, I read an article years ago by David Potts, who was a journalist for the Sydney Morning Herald and the Australian Financial Review, who interviewed me many times until he retired. Now, you'll find it on the Wealth Within website in our Learning Centre. Now, we've titled the post, "What is Robot Trading and Should You Be Worried?" Now, the link for the article will be in the comments section below this video. Now, Janine, in your normal super sleuthing style that you're normally used to, you've been chatting with Matthew Vidal, and he's the founder and CEO of Optima, who, by the way, I interviewed recently about quantitative analysis and trading. Now, he was so well spoken and shared incredible insights. Now, it really was very fascinating. Now, you can check it out on check it out on talkingwealth.com. Matthew is an industry expert, having studied all styles of trading over 30 years, especially software-based trading, as this is his field of expertise. Now, if there's anything worth knowing, you can bet he knows it. Now, in my opinion, he's built the world's leading technical analysis program, which, by the way, you get if you enrol in our diploma course. So let's get into what Matthew had to say, Janine.
Yes, Matthew, who I actually fondly call Mr. Bond of the stock market.
I'm not getting into that.
Very nice. Shaken, not stirred.
007? Okay.
All that. So this is really exciting, isn't it? Talking about what Matthew's got to say. And he made this point about pattern recognition. Now, we need to understand that this is an area that is subjective, and AI has already been used well in image recognition. It will not be the holy grail for trading, he says. At best, it will match a mediocre fund manager's performance. At worst, it will introduce considerable volatility into the market.
I don't know, do we agree with that, Phil?
Look, I know people in the institutional end trading quants that build algorithms, and their main purpose is to provide liquidity to the market, and they're working at such a minute level. They're really just working the bid in the ask. So really, the next tick, how that will impact a trader who's trading. I mean, if you were trading on tick charts, then perhaps it will impact you, and nobody ever will. So, we're holding positions for longer than a second.
Yes.
So it's really of no impact to a trader who is trading, position trading.
Well, he's saying at best they're going to be like a mediocre fund manager, which is there's pretty much lots of those. But at worst, it could be really create a lot more volatility in our market. But that's where it pays to be much more of an educated trader in my book. Because they're going to be running these algorithms anyway, aren't they? These AI bots.
Well, you have to have an awareness that this is going on and be one step ahead. And I think it really, hit me years ago when I met this guy who was actually running his own fund, and he was employing people, and he had this top secret, sexy program that you had to sign a confidentiality agreement before you would even walk in the door, because they were, and like Phil said, that they're just trading really short term in and out of the market all day, and that's it. I mean, as an individual, who wants to do that? Who wants to
most people don't.
And they have to oversee it and make sure that everything's happening right anyway, in case things go awry. So would you really want to do that?
But he would have been successful for a period of time and then would have melted down.
Exactly.
That's really what he's saying.
We've worked with traders who've come through our courses and thought, right, now that I know this amazing information, I'm going to take that and go and put it into some program and get the program working.
Okay.
That's a whole different area, isn't it?
Okay, well, obviously you had a long chat with Matthew. Did he say anything else?
Oh, look, Matthew's always coming up with some great things. Now, he actually told me that the issue is that AI systems are looking for the right answer. But what is right when it comes to trading? There are always sellers who are selling for a variety of reasons. So let's imagine that we all trade through AI. If the AI is giving us the best possible trade and it says to buy, who is there to sell? Liquidity will dry up and we'll have massive swings. Of course, this is the extreme case. The point is the signals to sell would be more brutal.
I'd never thought about that. I mean, that is really interesting because I'd not thought of it like that before. Now, I do know some think that AI trading will keep their money safe in the next major correction, as in theory it will just sell their shares. So are they right or are they wrong?
Yeah, look, I think that in terms of things being more, the moves being more brutal, I think, yeah, we only have to look at the stock market over the last 20 or 30 years to understand how this has all come in and what it's doing to the market. And simply looking at the chart of the market, which we're going to do, will just show all of that.
Well, to me, it's like if you've got AI is machine learning, isn't it? So you've got machine learning what we do, but then they'll be also learning what the other machines are doing, and then all the machines will be learning the same thing, and they'll all become the same. And therefore, as you said, or as Matthew said, who's going to sell? Because if all the machines are saying buy, and none of the machines are saying sell, who's selling? And for every seller, there's a buyer. So your market is not there. The reason why our stock market works is because we're all individual. So Phil might be selling today because he needs some money to buy a house. You might be buying the same stock today because you see a good opportunity. I might go, oh, I'm not ready for that one yet, and I'll buy it next month. And so that's why the market works, because we're all different. But making everybody the same, your market's not there anymore, is it?
Well, you
That's
think
really what he's
so.
saying.
You'd think so, but there's always going to be someone who thinks they've got the edge over someone else. How deep is your pocket to be able to do that?
Yeah, but that's what I'm saying is AI is machine learning, and they just continually learn and adapt to what's happening now. So eventually they're all going to be the same, aren't they?
Well, you think so because everything that is known is being used.
Yeah, correct. So anyway, but now we know that more brutal corrections mean that money moves from those without knowledge to those in the know. And by my calculations, there's just a few to the next one. We will look at what can be learned from the '87 crash, also the fall of 2008, and also the fall in 2020. And we'll look at the impact of AI. So let's take a look at the charts, Janine.
Yeah. Now, you and I have talked about this for years about when did our market change? We've talked about that. So if we think back to what happened in '87, we have this, and I can show you here on the chart, we have this massive correction on the market, and it was in the order of, that's actually playing up on me now.
It was just over 50%.
50%, okay. But look, it was in a very short space of time, not normal. Now, how similar is that to what happened during COVID? Our market fell in 3.5 weeks.
But COVID was an event-driven crash.
To me,
87
actually,
was an
you and I can
event-driven
have
crash.
Yes, it's an event-driven crash, but to me, it was actually orchestrated in terms of what actually happened on our market. And in my view, it was a test of all the AI.
That's different to 87. 87 was an economic one.
To me, 87 was an economic one, but still it was all about the computers.
No, it wasn't.
But there was some. That's what they say. But there was. This is all when it started back then.
I was standing in. Oh, well, not standing. I was in Collins Street working for Westpac Bank, and at the very time of the '87 crash, I was getting people walking in with pieces of paper which are called share certificates that weren't computerized, pushing them over my desk and saying, I want to sell this share, or filling out a piece of paper to buy a share, and then I would have to send these paper to the broker, which was Ord Minnett at the time for Westpac, because we owned them, and it'd take 2 or 3 days to buy and sell the shares.
Now, you
so
had
that's
no
not
computer back
generated.
then, but there were people who had computers, true?
Very few, and if you read the research, the top stocks on our market, only a few of the top stocks were on computers trading at that stage. The vast majority of the market wasn't. So they blamed computers, but I don't think it was.
So you think my theory is conspiracy?
Totally.
I don't think so.
Get your little silver hat out, something like that.
So come back and have a look, because if our market can correct like that in 1 month, very short time, how is that even possible if everything was manual?
Easy.
Not possible.
Panic.
It is.
Like
it's best panic.
Look, I was born in '86, so I probably should stay quiet because I wasn't around.
You remember it well.
Yeah, but like 1929, you know, there was that crash as well, and
Yeah.
there was no computers around then. I mean, once the panic comes, it comes
Everybody's
either
selling.
whether it's paper or, I mean, sometimes even more in the pit because it's so enhanced with everybody screaming and panicking. You could get that scenario, but look, again, I wasn't born, so
Phones
don't
were
listen to
around.
me.
We had phones. We had the tickers coming out. We had like across the road in Collins Street on the crash was the Melbourne Stock Exchange in Collins Street with the chalkies on the board. They were there. They were coming into my
You're
bank.
showing your age now, aren't you?
I know it's terrible, but the same in Sydney. But around that time is when all the exchanges amalgamated. Just before all that. But
I know 2008 when was and I saw a few documentaries around that, was when the quants really stuffed up.
yeah,
And we saw a few of those flash crashes. There was a British trader who accidentally pushed the wrong button with the code and caused a real big flash crash in 2008 with some
So
FX.
could it happen again?
Well,
Absolutely.
absolutely.
So you're going to talk about BHP as well, aren't you?
Well, look, so it's really important just to look at some of these corrections and understand, you know, they're not necessarily getting deeper, but are they potentially getting more volatile, which is what
That's the
Matthew was
question,
saying. That's
yes.
the question.
And I think that's correct.
Right? And it does look correct, doesn't it? You know, because we saw a big dip and a really fast sell-off in late 2008. And, you know, we say that that's just when the people who have no idea sell, but it's also when a lot of people who are shorting the market are also pushing and selling into the market as well, which the AI technology will help and exacerbate.
Yep.
And so we saw that happen in COVID, a true test of whether our system would implode. Our exchange, a lot of people don't know that our exchange crashed during that time.
Yep.
And so, you know, that this was the opportunity for those in the know to actually really test their AI, wasn't it? And so since then, we've seen the market flatten out. We believe that the market is going to peak out later this decade and then have another significant crash. So this is why
will, yes.
this is why we're starting to raise people's awareness to this sort of thing that they have to understand. Because if you're trading with a program, what's your safety or security net? What could stop it from blowing up?
Well, if you're just, sorry to cut you off, but if you're just going buy and sell from a computer and you're not looking at the bigger picture, then you're going to make a mistake, aren't you?
Yeah, well, that's right. And also not take advantage of the biggest rises when they happen as well.
Now, Matthew also shared that there was no doubt in his mind that many funds will move to AI, but doubted that their performance will be much better than existing funds. Now, also, with too much risk, which is typical of retail traders. Now, the probability of blowing up an account will not be diminished. Now, I'd agree with that, as we see thousands blow up their accounts in every occasion. As I say sometimes, or as I often say, times change, people actually don't. So let's give our answer to the question we posted, AI or manual trading, which is better?
Well, look, I'd have to be biased because I've trade manually and I've watched other people trying to use these AI programs, not AI, but just robot trading programs, finding that they work really well for a while and then they don't. And even some of the smartest guys that I've worked with who, you know the technical analysis as well, that have put these together, have watched their accounts go up, 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 and then eventually it just dives on them and goes the other way. So I'm not convinced by the robot trading at all. AI is a different ballgame. I think we're just sort of in the infancy of that happening there. Will that cause another correction on our market? Possibly.
Yeah, well, look, I've got two stories I want to share. One of them was about 2-3 years ago. I was contacted by these guys in the US who wanted me to be on a Zoom chat with some people in Europe who were developing a whole AI trading system. And because they knew my background and were friends, they go, I need you on this call. And after the Zoom chat for a whole hour watching these tech heads talking about how great their system was, I was back on to these guys in the US and they go, what do you think? And I go, they're full of you know what? And he goes, how do you know? I said, because it's not going to work. And then half an hour later, after I got off from the US, I rang Matthew Vidal from Optima and said, I've just been off this call, blah, 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 blah. What do you think? And he goes, I agree with you, Dale. And that's the sort of stuff. And I've seen that multiple times over the last 5-10 years, people contacting me to get my opinion. But another example I have is a gentleman we trained who did our course, who was working for a company developing this stuff. And after like halfway through the modules when I was mentoring him, he goes, Dale, now I know why we can't ever get this to work, because what you're teaching me, it won't work. So that's what I'm saying. Do you have a story at all?
Look, to me, trading is all about risk to me. And you're going into the market and, knowing if you're going to go down this robot trading route, that there is a possibility that you could completely get wiped, which we've seen many times with these quants and these robot trading styles. For me, getting wiped with that, it's no.
Yeah.
I don't want it.
Yeah. So how about we go into the charts and share our thoughts on top 10 stocks. Now, I know we're going to get into about 3 of them now and the rest after the break. So how about we bring out the charts and look at some stocks?
Now, we missed out on talking about BHP, so we'll talk about that after the break. We'll come back to that one. We'll talk about FMG right now. And look, FMG is a really great stock. My preference, I prefer BHP, but I wouldn't knock FMG back. Just having a look at it, to me, is this the sort of stock that you could trade with an AI process based on the level of volatility that it shows? To me, I think there's a potential here, but still there has to be some manual intervention to get that process working. So therefore, is it ever going to be fully automated? Because what we're looking at here is some of these nice runs. These you can trade with a great set of rules. 138% runs. Phil, you were going to say something?
I am going to say something, but
70% off this one.
Yeah, look, and good that you brought this chart up because it's a beautiful example of how the market's changing character. You've got a market from December 05 to August 08 that's trending, and then from August, July 08 to June 2018, it's gone sideways. So that trending strategy that you're showing here, talking about, that's not going to work for the best part of 10 years. And then again, the market trends from 2018 up to 2021.
Yeah, so they have to know when it's changing to stop. That's the thing, and they don't.
That's the thing, because it's programmed with X's and O's. It's black and white. If X does this, buy or sell. And unless AI has gotten to a stage where it can...
Well, they're saying pattern recognition is really coming to the forefront
like a human.
now.
But again, even the pattern recognition, it's the human that has to put the pattern in there in the first place for it to look for it.
And when you think of some of the patterns that we study in the, we teach people in the course, how is an AI going to actually recognise that?
Well, as Matthew said in his comments, the machine is looking for the right answer.
Yeah, so if it's a triangle, if it's a square, or if it's a circle, it's well defined, but the shapes are so different. The pattern can be there, but the actual shape of it can change so much.
Well, that's what I was getting at, is to say, how often have you traded and a pattern's been there and you go, no, I don't want to trade that pattern, even though last time I traded that pattern, because there's something else that you're seeing in the chart which the AI won't see. So that's what I'm talking about.
Or even how often do you ever see the exact same look of a pattern that you're seeing? Although you're looking for the same thing in terms of a pattern, no two patterns ever look exactly the same. So
it's interesting, isn't it?
So that was FMG?
All right, so FMG, look, I think that what I just wanted to summarise with is short term. The way FMG trades, it could be 3 or 4 months where those sort of things could work really well.
Okay.
But you could still just use short-term trading rules to do it.
Okay.
So that's FMG. Z1P, which I picked this because it's one of the most talked about stocks. It's most highly traded stock at the moment, and we often get questions about it on the show. How in the world is the AI going to know where this is heading? I mean, it's just...
It's had 4 seasons in 3 years.
So it's almost like you have to sort of do the analysis first on the chart and then say, right, we think it's going up now, bang, we can hit the button on our AI code. Off we go.
And look, that might be a viable thing that they're doing, but in terms of it to be fully automated and thinking this way, it's a long way off.
What reminds me of, something you raised at a workshop once, where you look at a chart and you say to people, this is a short-term view. So say I squash this right up. I'm just going to show you what I mean. I'll squash this right up. Now let's just say that the AI said, right, this is a buy, right? Whereas we may have done some analysis that indicates, like we did when the market crashed during the GFC, we knew that there was another move down, but the AI won't see that, like you were saying, Phil. So the AI will be in there, but every time it moves up, and it may be over an indicator or whatever's driving the entry reasons, it goes into a trade and then it goes out. So with these sort of moves, these could be costing a lot of money because you're going in and out all the time.
Well, I think most importantly, to sum it up, what you're talking about is mechanical buying and selling rules, which is really mainly what it is, versus overall analysis of a stock, which is not just buying and selling rules.
It's the big picture that we talk about, isn't it?
It is layers and layers of analysis that have nothing to do with buying and selling.
Yeah, exactly. Good point.
So next stock, while you bring up the next stock, we can have a look at that. I was being interviewed by somebody the other day, and he was asking us about why we're different than other educators. And I said, because we look at the blank side of the chart and determine where it's going. That's why we're better traders. Algos and AI are looking at what's happening today and buy and sell, which is what most people are doing. That's why our traders are so much more successful, because we're making assumptions on what's happening into the future with a high degree of accuracy, because that's where you're making the money. So have a look at the next stock.
Yeah, so the next one, WiseTech, you know, it's a really interesting stock. It's really, this is highly talked about as well. We like this one. And look, the patterns are repeatable. So if you see this move up here, this is the high in August 2018. You can see how it pulled back for a few months. And then it had this fantastic run. So there's something that you would mark in the sand. As a mechanical trader, you'd be looking for that, because it did the same thing here. Up, sideways, a couple of months, bang, off it went. Did the same thing, up, sideways, bang, off it went. So like, you know, there's something repeatable that a trader's going to see, because it's got that repeatable pattern, but it would be very hard for an AI, I think, based on, you know, understanding mathematics, for it to pick up that sort of thing.
Well, quite possible. Anything you want to add to that, Phil?
No, I think, yeah, you've nailed it, Janine. I mean, look, it's, yeah.
So WiseTech would make a top 10 stock. It may pull back in the short term. We're just watching for that at the moment. But, you know, it should always be, there should be these sort of nice growth stocks that can provide a good return over 4 or 5 months.
Okay, so that's the 3 stocks you want to look at?
For now, unfortunately. Can I say more? Can I talk about
Is that
more?
a loaded question? You can
I'll
always say
take the
more.
mouse
I'll put you on the spot now.
Take the mouse away from it. But did you want to cover BHP quickly?
If we've got time, that would be
How's that?
Yes.
You got
All
a
right.
minute to cover BHP.
Now, BHP is an interesting one indeed, because of the patterns that it's formed. And look, you know, it has some really decent rises. Again, potential that AI could be turned on and off along part of these runs here. But just looking at BHP, if you understand patterns and you know that that's a big correction for the commodities market, we've only just gone through an all-time high. There's the potential for another huge rise. It's trying to break up through these highs. But because of the sort of growth that this stock can have, I'd have to put it on the top 10. It's just without a question.
And we're not saying that patterns don't exist in the market, because, you know, we do our back testing and we look for buy and sell entries. But what we're saying, that overlaying analysis of a stock, which has nothing to do with that, that's the part that's tricky. Because, I mean, look, down the track, there's no reason why certain parts of your trading you can't automate. I know I automate a little bit of my buying and selling so that I don't have to sit there and do it. You know, people leave orders in the market. That's almost automation to some degree. But for it to decide when to buy and sell for you,
Different story.
different story, yeah.
Yeah.
Well, that is it for our topic for tonight. Now stay with us, as we've still got plenty of emails and stocks to go through. But before we get into these, for those watching on YouTube, you can watch all of tonight's show plus the exclusive content on talkingwealth.com. Just head over and grab your free 7-day trial. The benefit of being a Talking Wealth member is that you get our in-depth approach to lots more stocks and our detailed answers to even more questions. And another bonus is that every Monday I produce my weekly Australian stock market report, where I share my views on the market and some great opportunities. Just one of these opportunities will definitely pay for a yearly subscription to Talking Wealth. On top of that, you'll also get hundreds of amazing interviews with industry experts from around the globe. This is all on talkingwealth.com. Now moving on, we'll get into some more questions. So now's your time to pick up your phone and give us a call on 039290 9988. That's 03 for Melbourne, 9290 9988, or you can text the number on your screen. Whilst we wait for your call, let's get into our next email. Our next question is from James, who says, "Hi team, with mid-season reporting occurring over the next few weeks on the ASX, I was curious about how much attention you pay to swings in price when results are released. If trading for the short to medium term, must admit I'm a little hesitant, as last year saw some great trending stocks, for example ResMed or WiseTech, plunged by more than 20% in a single day when results were announced, triggering my stop losses. Many thanks, James." Now I'm going to ask a question. We're going to answer that, but I also want you to put that in the context of AI algo trading. Would that have the effect on it? So, Phil.
Well, firstly, he did mention short-term trading, and yes, it is a thing to consider. I mean, we know before announcements, half-year, yearly profits are coming. So, and we also know before ex-dividend date is coming, and they're generally the two times when you're going to see stocks either gap up to the upside strongly or fall out of bed based on these important results. So,
Yep.
I know a strategy, particularly short-term trading, is stay out of the market for that week. Or stay out of the market a few days leading up to that, because if you want to avoid the risk of being one of those gappers on the wrong side, then just get out. You know the dates that they're coming.
Yep.
Yep.
Janine?
Look, I think it's really important just to have an awareness, like things like reporting, things like ex-dividend dates and that sort of thing can prepare you, but go back over the history of the chart and look at what's happened before, have a look at the degree, so then you're not so surprised by that level of fall or, you know, the rise that happens out of that, because it happens every reporting season. It's just there for us. So
It doesn't happen on every stock, does it?
not on every stock, no.
It's only some stocks.
Look, I'd really study stocks that have their debt situation's a bit of a problem. I'd be looking at that. The interest rate scenario really affected some stocks, but I think it was overblown.
Yeah.
But I think people have to have the awareness that this is more or less becoming the norm, these sort of movements, because of the AI trading that's there, because they're going to exacerbate that sort of move. Now, the argument is to create more volatility or liquidity in the market, and to do that, you know, we've got to have the volatility. That's always been a big argument by the funds, but as to having shorting in our market, which, you know, I'm dead against the shorting and having that volatility and liquidity in smaller stocks. So
But I think that's just BS.
well, you just have a look at some
Not
of
from
the
you, but from the funds. That's what I meant.
look, I was surprised at that comment, yes.
Cool. Anyway, we do need to move on. We do have a text from Jazz is asking about AGL. Midterm, bought at $8 on a weekly trend, and Jazz is asking our thoughts. So have you got AGL up there?
Yep.
Cool.
Got it up
So
on
what are
the
your
chart.
thoughts? $8?
$8 was the buy,
Yep.
and looking for medium term.
Medium term, yep.
Medium term. Look, well, what's that saying? Don't catch a falling knife. This stock's falling, and I mean, it's been falling. If we look up on the monthly chart, it's been falling since August, and not only falling, it's closing lower. January's been a decent fall month, and February's continued on. So, to me, this stock has not looked like it stopped falling, neither on the monthly nor the weekly. I see $6, $6.50 as a level where it could potentially stop falling, but until we see some movement to the upside and some highs perhaps being broken, I would assume this is going to keep going down.
Yeah.
Yeah, look, I was actually really starting to like it at one stage, but now I'm just wanting to bring up the longer term pictures just so that we can have a better look here. Once you see this sort of move down, and look, I have to put a trend line on there just to explain this, but this is what, Phil, you're talking about. If it starts trading below there and even comes closer to that low there you mentioned, yeah, it doesn't look great, does it?
I mean, there's no green.
I think it's going to be quite a while before there's an opportunity there.
So, yep. So you're saying if Jazz entered at $8, not a good entry.
No.
Well,
And if they're not in it, stay out of it.
yeah,
And you were going to say something
because
else?
when we generally trade, we look for confirmation.
Yeah.
And there's nothing here to show any confirmation of a reversal. So, yeah, that'll catch falling knives and.
Yeah, well, I often say to people, it's like, you know, you always have to respect the longer term trend. If the trend is down, you need to assume it's going to continue to down until it's not. And that's what you're saying, there's no confirmation yet that it stopped falling.
At
So
all.
Well, there's no
get out of it.
confidence in the stock
Yeah,
for
no
a start.
confidence.
If the big money's not putting their money into a stock like AGL, which is a big stock, why would you? That's really the point.
All right, well, let's move on to another text. This one is on Silver Lake Resources, and it's from Kate. Now, she's saying, major announcement yesterday. Why was this negative to Silver Lake Resources? Bought in at $1.09. Will the price hover due to merger? So, Silver Lake Resources, what do you
I
reckon?
have not heard
I
it.
haven't heard the announcement myself.
I do follow this one from time to time, but I'm not up to speed with this one. So, but just looking at it, obviously that nice little move has been broken. If you're looking at the weekly chart there, you've got the monthly chart there, Phil, but just having a look at that weekly chart, it's taken out that low there. It's probably at least going to come back to that point, which is around $1. And if it goes back below $1, then I wouldn't hold out much hope for it in the short term.
Look, if we go back to the monthly chart, I actually saw something. I don't mind the fact that it has been falling for, since July 2020, and it's come out of this low here for the last 4 or 5 months. It's been coming up in the green. Now, this month we've had a down month, which, okay, there's been that announcement, but we've had 5 months up, and I don't think that we're not showing any signs of bullishness. There are definitely some signs of bullishness here. So,
you think it's a bit of short-term noise in the market?
I think, yeah, always around news, you've got to wait and see how this is going to play out, because a lot of the time negative news can start.
Well, it did say merger, so negative or positive. I mean, without reading it, yeah.
Look, I mean, it depends what the merger entails and what it means for Silver Lake Resources, but I get really, I'd be really sad if it was an overseas company. It sounds like it's an Australian.
Well, we can look at it for next week if you want.
Yeah, that'd be
Did you want to
interesting.
bring that up for next week?
Do that.
Why not?
Yeah, sure. We'll do some research for you for next week, and we'll have a talk about it next week. So Philip can put that on his list of things to watch. Now we're going to have another text, and this one is on VVA, and it's from Gerard. He says he bought in October 2020 at $2.99 per unit. And Gerard's asking our thoughts on that one. So what do we think?
$2.99?
I like it, actually. Yeah. In the short term, I like it. It's a bit illiquid. It's trading above $1, which is good. However, it's making some of the right moves, and it's formed one of those little patterns. I'm just going to bring it up on the weekly chart, which tends to be good, but it has to tick another box before I'd be really convinced about it. So if we just look at this move here, and I'll just draw a little pattern underneath there, it just got away from me. So you can see this little pattern that's on the chart there, a nice little break to the upside. I think, it could head above $2 just looking at that.
Yeah, look, I mean, he's bought it in 2020 at $1.99, and it's fallen to back under $1. So, potentially there's not been a tight stop at all.
Well, it implies he hasn't had a stop at all, but yeah. So what are you suggesting right now?
So I'm suggesting, look, if it does look like it's basing out here, and like Janine said, it's, when stocks do base here, if they start to poke their head above, then it potentially could go up. But I mean, with no stop in place, I would really employ him to first think about what you want to do here in terms of putting a stop in today and saying, if it goes below X, I'm going to get out. Don't let it fall all the way back down again and hope for it to come back up. That's what I'd be saying. And if it were to get back to 199, then maybe take something off the table and reassess.
All right, Gerard, so Philip's saying make sure you get a stop loss, draw a line in the sand right now, and if it does start to go up, keep raising your stop loss up underneath that, and hopefully you get back to your buy price at the moment. But we do have another text, and one is on NAB, and it's from Anne, and Anne's asking, she purchased in 3 blocks over 12 months at an average price of $28.26 without any rules. I have been backtesting to find an exit strategy. Would like the panel's thoughts. I think it will hit some resistance at the $32 mark. So, NAB, what do you reckon?
Like it. So, good choice.
Ooh.
Yeah, really like your stock choice. And she's purchased a few parcels, which, maybe not necessarily any sort of order to that. I don't know. She didn't give enough detail.
She said there's no analysis that she bought it on.
Yeah, no, I mean as in sizes of parcels. But, obviously with big bank stocks, sometimes people do that. They just add to their position and build the position up. But I just think that this looks great. There could be a little bit of a short-term pullback on NAB's share price before it heads up. It's got a lot of resistance to get through though, so I'd really like to see it get back above this recent high of just last month's high, January high, 32.60, and it could head towards around $36, $38, I think.
Look, I agree. It's got that resistance around that $32, which is quite strong. I would like to see how it reacts from here. If it can pull back a little, if it's going to do that, and it can hold above the $30 mark and then shoot on up again, then I'd say, okay, you've got something here.
2 weeks ago, you were all CBA, you were all Westpac, neither you like NAB. Now, what's changed?
So I'm still CBA.
Well, we like it because I just like the way that she's thought about it. It's obviously a bank stock, and it's good for investors to pick these sort of stocks. And you can see, in this case, she's fortunate in terms of her timing of when she's bought it.
Yeah, I mean, she bought it in 3 tranches, so she's picked up this relatively average price, so that's fine.
Just be careful because, look, that $32 it has been big resistance.
So if you're not in it now, should you be buying it? And if you are in it, what are you doing holding it?
I'd say hold, yes.
Yeah.
Like I said, I'm waiting. I want to see how it reacts around these levels, and if it can react strongly, then poke its head above again, then I'd be looking at buying.
So
it.
not buying yet?
No.
Sit on that. If you're not in it, just wait a little bit, but if you're in it, keep holding. Now remember to hit that like button and show your support for our channel by clicking subscribe. Now it helps others find our channel, and so we can help them too. Remember to show your support for us by commenting below the video after the show, because we'd love to hear your favourite part. Remember, give us a big thumbs up. It does help new people discover the channel. That's it from us for our YouTube viewers. For Talking Wealth subscribers, stay tuned for the bonus content we promised. Next week, our main topic, we share 3 top stocks to buy now, and we get into key sectors that Warren Buffett is buying stocks in. So make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love this show, then show support for the team that puts in an effort to bring it to you each and every week. Give them a big thumbs up and subscribe to our channel. That way you'll know when we go live and upload more content. As always, thank you for joining us. For now, goodbye, good luck and good trading.